Welcome back, folks. In this video, I'm going to talk about ICT algorithmic price delivery. I call it my free cash Friday setup. I look for this on a Friday, and most of the time, it's there on any pair. You just need to know what to look for. Okay, so I'm going to walk through it in detail. I'm going to first give you an overview, the easy way to spot it, and then I'm going to jump into a lower time frame to talk about what we see from a algorithmic price delivery perspective on a lower time frame. Okay, first thing I want to mention that this lesson is on the euro. I did not trade this on the euro. Okay, I predominantly trade the gold market, and I'm going to show you the same setup on the gold market as well, so you know what I actually traded. Okay, now the first thing I want you to notice is that here on Thursday, okay, the market closed here 5 p.m. and the market left these equal lows. Okay, so it's pretty clear. Anyone looking at this on a Thursday after the day has closed or the session has closed, okay, that there's equal lows there, and high probability the market's going to run out Friday lows. Okay, that's not the setup I'm going to talk about, but I'm just mentioning that, right? And you can see market opens here at 6 p.m., right, and comes into a premium PD array and then drops down, takes out what is the previous daily low and obviously the equal lows. Now, it really depends on what session you're trading. I typically don't trade euro in the Asia session, okay, but on Fridays or any day where you take out the low of the day, right, there's a possibility of a great setup. Okay, so the first thing that I do when I'm looking at this type of a setup is I mark out my hourly order block. So this is a bullish example. Okay, so we're looking for the down candle that took out liquidity. You can see this down candle, right, started this move down and it's taken out liquidity. So that's opening price there is where I'm going to mark out the bullish order block. Okay, that's the first thing that I do. Then I jump down into my 15-minute time frame and I look at the Asia range. Okay, so there is the previous daily low marked by this line. We've gone through there and reversed. Okay, and that sets up my interest in this market when a previous daily low has been taken. Okay, now the second thing that I do is I will mark out the Asia midpoint. Okay, so we take the high of Asia from 8 p.m. right, starts from 8 p.m. Okay, and do the low, and then I mark out the midpoint. Okay, now the reason that I mark out the Asia range midpoint is because that needs to support price. Okay, I don't want price to come down below that and that become resistance. Okay, otherwise we'll go lower. Now I want you to note a couple of things. Okay, so we have the hourly bullish order block. Okay, these three down candles are another order block on the 15-minute time frame, and look at what time we're coming down into there, right, at 1:30. Okay, then we go up. Now we're pushing down into the hourly bullish order block as well as the 15-minute bullish order block. Okay, and that is bullish order flow, right? Now for the New York traders, you can see we're coming up, okay, coming down into this down candle, which is the bullish order block, as well as coming down into this inversion fair value gap right at 8:45, right? So 8:30 is pushing down, pushing down, pushing down, and you can see this down candle, okay, coming into this midpoint of that wick, right, that support, as well as into this, if we just mark that out, inversion fair value gap, okay? So order flow is bullish, and we can see the market going up, okay, and again at 10 a.m. coming down into fair value gap, bullish order block, up to the high. Now we can see on the left hand side these equal highs. Okay, so if I drop down to a 1 minute time frame, I can see on the left here, right up here, I'll just expand that so you can see, we can see very clean equal highs there that the algorithm will target. Okay, not only that, but we also have the previous daily high, another level. Okay, so you can see we've gone straight up there. Let's go back to a 15-minute time frame. Okay, very, very clean equal highs. So once the market has reversed from the bottom here, we've gone up. Okay, change in the state of delivery, right? Okay, bullish order block. How's that a bullish order block? Well, we have swing low, okay, swing high, lower low, and we are now above and pushing down into that up candle that created this swing low. Change in the state of delivery as well as bullish order block, okay? And that's where this candle at London is coming down into, right? Into that, sorry, it's up here, right? Bullish order block there. Swing high, swing low, we've gone above, coming down into those sequence of up candles. Okay, now we can also align this equal high with this previous daily low when the market's coming up there as a target by projecting a range projection from this manipulation, right? So this movement down in Asia is the manipulation, okay, once we're above. So once we're above there, we can project using that range. Okay, I've already got it there. So what I'll do is I will project a 2.5 standard deviation. That's what I typically use, and I'll show you why in a moment. So you can see 2.5 standard deviation, okay, comes directly into this rejection block. right? So these targets are only relevant when you can align them with a PD array, okay? You can see how closely that projection aligns with that PD array. Now, what I'll do typically is I will use 2.0 or 2.5, okay? And then I'll look at where are the PD arrays, right? So this one's also important, okay? So look at how price is behaving at that level, because this is aligning with this PD array, okay? Then I will also take the entire range of that dealer's range, right? Which is this high, okay, down to that low. And I want something above that, right? So see how when we did the range projection, we'll do that again, the 2.0, let's do that, is up here, and that's above the premium, okay? So that's maybe take partials, and then a runner for the 2.5 projection, which comes in at the rejection block. And then you've got pretty clean equal highs there that I showed you on the 1 minute chart. I kind of want to see if we can get up through there as well. And we have this premium PD array there. Let me just turn off some of these so you can see some of that. We have a bearish Fibonacci gap, right? Premium. And so you can see that's where we also tapped into. So they're levels that you want to have on your charts, okay, to kind of understand and identify levels that you want to be watching to take partials, okay? So I want to also talk about something also very important, right? SMT. I don't use SMT a lot because typically the price action and the signatures is enough to identify direction, okay, and entry. So let's come back down here. And what I want to show you is on the euro, and we're going to drop down in a lower time frame in a moment, okay, because we're going to go into a lot of detail in regards to algorithmic price delivery. I'm going to learn how we can get sniper entries, okay, so make sure you stay to the end. Now, look at here, this price action, okay. Notice that we did not come into this Fibonacci gap, right? One would expect to come into that Fibonacci gap. It's 130, and we started to reprice higher. However, if you look at the pound at the same time, okay, there's 130, and pound actually went into its Fibonacci gap, as we can see here, right? And so, whoops, we can see some SMT divergence there, right? So pound is making a lower low, right? And euro is actually making equal lows there, okay? So clear SMT divergence, okay? And so euro would have been the choice to long the market, okay? And you clearly see that's divergence there, okay? Now, let's also drop down into a smaller time frame now to learn more about very specific signatures that we can look for on smaller time frames, okay? So I'm going to drop down to a 5 minute time frame now, okay? We're going to keep our hourly bullish order block up here because that's what we're looking for, right? So if we go back to the hourly time frame, we are essentially looking for the market to come back up and tap into this hourly bullish order block, okay? So on this 5 minute time frame, what are the different things that we can identify? And if you can master this, then you are free, okay? You know exactly what to look for and how to get sniper entries, okay? So the first thing I want you to think about is this. This is the midnight open, right? Now, ICT has taught us that's a very important time, okay? So if I want to be longing this market, then I want to see some kind of a Judas swing, okay? So on the midnight open, we go up, right? Up, up, and now we're coming down, right? But I want you to pay close attention to what's going on here because the market needs liquidity to go back up through these levels. And also, as it's going down to its objective, it also needs to take liquidity. So it's gone up here and has left very clean equal highs, right? So this is the midnight open going up, and this is what we want to see. We want to see the Judas swing price coming back below the midnight open, which is that candle right there, okay? Now, I want you to notice what it's doing here. So it's left buy side, and it comes down, and then pumps up. But what is it doing there? It's now engineering equal lows, right? So it's pumping up, then comes down, okay? Now, it's come down below the midnight open. So we kind of are getting that Judas swing, right? Not only that, it now takes the swing low here, okay? So it takes engineers liquidity on the downside, okay? Takes that liquidity as well. And that's important, right? We need to see liquidity on both sides taken. So it leaves buy side intact, right? People are shorting from there. So it leaves anyone that's got their stops above there intact, okay? Even people who are short from here, okay? Just leaves that intact, comes down, right? Now we're below the midnight open. So we go up, here's that Judas swing, okay? Takes swing low. And what's it doing? Coming into this 5 minute Fibonacci gap. Okay, well, it actually leaves that, but that's where the SMT is, right? Because you can see on the pound, it's going into that Fibonacci gap in the 15 minute time frame, okay? But it's taking liquidity, and now that's at a very key time. 1 a.m. is the start of the ICT London kill zone. And in that first hour, I typically want to see the manipulation, okay? So we come there, take liquidity. Now, this could be after that, it's 130. You can take a buy position, right? You can scale in. Your stops are going to be below that Fibonacci gap, okay, and we start to move higher. But what's important here? Where's the safe entry? That's what's important, okay. So we have gone up due to swing, takes liquidity, right, takes sell side, okay. We start to move up. Now remember, this is our key level, right? The 1 hour bullish order block. We want to see price go above there and close above there and close above there with momentum. Do we have momentum here? We do. We have Fibonacci gaps. Okay. Not only that, but we also have, we've closed above, change in the state of delivery. Market was going down. Now market's going up. Okay. And we're pushing down into the hourly bullish order block, right? And at 2 a.m., what's going on here? Coming into this tiny little fair value gap, right? Market then pushes up. Okay. Then we have this now, brand new hour, coming down, okay, and coming down, right, into this Fibonacci gap, right at the new hour, 2 a.m., okay? And if we jump to the, let's actually put a line there, horizontal line is what I want, and we now jump to the 15-minute time frame, okay? We can see that move up and drop down is into this bullish breaker, okay, where we had a swing high and a swing low. Now we're back above that swing that created all this down move, and we're pushing down into it. Okay, you can see there. So that's our bullish breaker entry on M15. But we can see on the 5-minute, that's the key, because on the 5-minute we want to see energetic momentum move up into through our hourly bullish order block, coming down into the hourly bullish order block into a 5-minute Fibonacci gap, and these 3 down candles are a bullish order block on this time frame as well. Okay, now I'm going to jump up to a 15-minute time frame, and as I said, in London, and so we've got entries in Asia, London, and New York, right? So this down candle here, as we've seen, is coming into the bullish breaker. Okay, that's an order block now, right? So we've got our London entry, okay, and that's all happening at the open of London into the bullish breaker. Okay, also into the bullish order block and hourly bullish order block. Okay, New York, 8:30, coming down to the bullish order block, right? There, we're pushing down, pushing down, pushing down, okay? And inversion Fibonacci gap, right? 10 o'clock, coming down to the bullish order block and Fibonacci gaps, okay? So, the other thing I also want to point out here is if you look at the pound, and let's mark out the Asia range, it actually went and through the midpoint, right? You see, it came into its Fibonacci gap and supporting at midpoint of the Asia range, very important, okay? Whereas the Euro did not get into the Fibonacci gap or the Asia range midpoint, okay? So go back and study your charts, okay? And I want to actually look at Euro. Look at these signatures, right? On the 15-minute and 5-minute, okay? So let me delete all the drawings and let's do a quick recap. So we have on our hourly time frame a bullish order block, and that's the key, okay? That's the one you want to use because that's important, right? It's high time frame alignment, okay? Then we can see just on a 15-minute time frame, right? You don't have to drop down, but if you drop down to a 5-minute, you can learn a lot about the algorithmic price delivery, okay? So there's our bullish order block on the hourly time frame, okay? We're coming down 1 o'clock, okay? We take out these equal lows, right? And the swing low, okay? Down at 1:30. Don't get into the Fibonacci gap, but that's where the SMT is with pound, okay? This in itself is forming a bullish order block. We go up, and we're coming down into the hourly bullish order block and 15-minute bullish order block, okay? Now, London open, so there's obviously a long there. London open coming down into the breaker, right? High, low, higher high, and then coming down into that up candle, which is a bullish breaker. Moving up, okay? You're always going to get reactions from PD arrays, right? So we have a reaction from this premium PD array, right? And we're just consolidating, okay? Key times, 7 a.m. makes a higher high, right? Takes that liquidity, comes back down into the bullish order block, right? Consolidation into the bullish order block, 8:30 into the bullish order block. Again, inversion Fibonacci gap, right? Let's mark that out. So lots of signatures telling us price is going higher. Asia, London, New York, okay? Making higher highs, higher lows, okay? And then we move up, okay? From that bullish order block, small little Fibonacci gap, 10 a.m. into the bullish order block. Let's mark that out, okay? And Fibonacci gap, right? There's a Fibonacci gap there as well that 10 a.m. comes down into, okay? You don't need a lot of movement. You just need this small signature. So you can trade, I don't trade Euro in Asia. London will be the first time I would trade it, okay? Or New York. But there's this entry here at every session, okay? So 10 a.m., bullish order block, Fibonacci gap up to the projected targets, and that's it, okay? If you were to hold a runner, didn't see if you get higher prices, once you see the 50-minute Fibonacci gap, price is now respecting that, you'd want to be exiting, okay? That's if you were holding runners. Obviously, you want to take partials all along the way at key levels, as I have explained, okay? Now, I didn't trade Euro, as I said, I am predominantly trading gold and the NASDAQ, but if I show you on gold, okay, very similar setup. We have previous daily lows taken, if I mark out the Asia range, right, from the high 8 p.m. to, that's the high there, okay? You can see that the midpoint is supporting price, fair value gap, right, coming down to a fair value gap, and that's our entry to go long. Now, we longed, VIP longed a bit lower than that. We had lower time frame entry at 32.90, okay, and we held that for 500 or 600 pips. So from 32.90, we exited somewhere up here, 560 pips, and our exit was based on this high time frame, premium PDRA, the midpoint of which is at our exit, okay? So, same trade that we did on gold, same setup available in euro and probably on many, many other pairs, right? You look for these on Fridays, okay? Especially when you take out a previous daily low, mark out your key point of interest, look at smaller time frames to identify those key algorithmic price signatures as I've explained in this video, okay? You've got to go back and you've got to study your charts, okay? Hope the video is useful. I will now talk with you in a future video.